Hi everyone, very good morning. You're watching Market Fafatat on ET now with me, Mubina Kapasi. Day one of the brand new year's brand new month series, and we seem to be decently in the green. 77 points of an uptick on the Nifty. We are back above 12,200, and the Sensex as well is gaining in triple digits. The Nifty Bank is supporting this uptick. So quite a nice move seen in the markets today in trade. Market Fafatat, as you know, is all about flagging off those individual movers and shakers. So without any further ado, let's bring on board our expert. We have Sumit Bagadia of Choice Broking, who's going to be talking about the technical perspective of each stock, and from our research desk, Varun, as well as Soumya. Morning everyone, and let's kickstart the show with the PFC REC. These stocks are in focus because there was some news that came in today that these two power financing companies may extend loans to the power sector, to state power discoms rather, but they will have very strict performance norms rather, like reducing commercial losses, bringing in financial discipline, and implementing prepaid metering. Besides the fact that there will be state government guarantees as well as timely release of subsidies and time frameworks within which the payment of government dues, government department dues will have to be done. So lots and lots of strict, caveats before PFC REC lend loans to state power discoms. Of course, that's a different thing, that distribution utilities of many states are not keen on borrowing money to pay their power bills. PFC higher by 2.8%, REC as well gaining minorly. All right, the next stock on our radar is United Breweries. We've seen a lot of volatility combined in the stock price. Lots of rumor mills as well are abuzz with respect to news pieces about Heineken's open offer, among other things. But yeah, Sumit, UBL, what do you make of this volatility seen in the stock?
Hi, good morning. Well, I think UBL has given a good move in last couple of days, but now the stock should face some resistance at higher levels. So it's better to avoid long positions. If there is a pullback or bounce back till 1290 or 1300 levels, then that should be used as a selling opportunity. In fact, we feel that one can initiate sell positions at the current market price too. Support for the stock is placed at around 1250 levels. Once the supports are taken away, we can see a move till 1230 or 1220 levels in next couple of days, in next 1 week to 10 days time horizon. So it's better to be on sell side in UBL.
Okay, so Sumit is not exactly optimistic on a UBL. Do consider his advice when, taking your trading decision. And Soumya, rating companies, they've been in trouble since the IL&FS matter. In fact, the management as well has been replaced. What's the latest here?
Well, we have SEBI imposing penalty of approximately rupees 25 lakhs on all these rating agencies, be it CARE, ICRA and India Rating. In fact, they said that the companies did not they do proper due diligence. In fact, there were lapses and they were not timely, rating of all these NCDs that were issued by IL&FS. In fact, they said that the companies were actually found to be relying excessively on assertions of the IL&FS management. Well, this is all in fact negative for the credit rating agencies and the companies, but in fact we're seeing good sharp up move coming in the stocks on back of the fact that this was a very big overhang which was on the stocks, which will get removed from now. In fact, past few days, ever since the IL&FS crisis came to the forefront, we did see a lot of rating company agencies stocks falling on back of these concerns and these developments. However, with these penalties being imposed, there's a big overhang that has just been removed, and we may see it actually rallying on back the fact that this has been done and dusted with.
And it's a 25 lakh rupee penalty, on a matter that has a debt of 90,000 crore rupees. So, CARE ratings higher by 3.5%, but interestingly, ICRA is absolutely flat. Not much of a move seen over there. All right, and Varun, HDFC AMC, what's CITI's view on this stock?
So CITI continues to maintain its neutral stance given the huge run-up we've seen in HDFC AMC. However, they have revised the target upwards slightly. So the previous target was around 3,200, which has now been moved up to around 3,500. Now this is on the back of an increase in their EPS projections for HDFC AMC. They think the adjusted earnings are going to grow by 3% and 4% respectively for FY20 and then for FY21. Now this is also because the business is seeing an uptick in the equity segment, so these additional earnings are coming in from the equity segment, and if you break up the businesses and do a summary of parts, that deserves a higher multiple. So factoring that in that these gains are coming from the equity portfolio of the company, CITI is upgrading the stock by another close to 7-8% with a target price of 3,400.
Okay, 34.80 is where Citi has placed their target price for HDFC AMC. The stock price is, however, a bit flattish right now. Okay, take a look at Gujarat Gas. This one is seeing a nice uptick come by today in trade. This after we had CRISIL that's actually upgraded the company's long-term bank facilities. We're not sure of what the amount is. It's just the long-term rating of bank facilities in general that has been upgraded to a AA positive. The outlook as well is stable. So you are seeing some nice momentum come by in the stock price. Interestingly, though, it's come off now from the day's high. The rating has been upgraded from a AA to a AA positive. So it's a one-notch upgrade. Now it's left with gains of only 1.1%. That's Gujarat Gas for you, 226 rupees. Okay, and Sumit, L&T Finance, another stock in news, recently had its NCDs as well that were issued 3% higher for this one. Your view?
It's looking good on charts. Last 7 to 10 days, we have seen a consolidation and a small narrow move around 200 DMA levels. Now from the levels of 200 DMA, we have seen a smart pullback and bounce back. Looking at the chart, it seems that the stock is headed for 125 levels. I think it's a good buy at around 117, 118 levels, with the stop loss to be placed at 114 on lower side for the upside target of 125 levels.
Okay, so that's L&T Finance, 3.1% higher. Soumya, HG Infra, what is the news piece of the year that's causing the stock to gain so much?
They have been declared as the lowest bidder for a project for construction of bypass in Rewari district of Haryana, which is worth over 522 crore rupees. This is basically what's keeping the stock and this counteractive in trade today. In fact, as per their press release, the company states that their order book is now at around 6,272 crore as of September 30th, 2019. So definitely a good momentum as far as the top line is concerned. We're seeing these order wins definitely put some positive limelight as far as the top line is concerned, and we're seeing this good strong reaction coming in the stock on back of this development.
Well, yes, a nice 7% rise coming by on an HG Infra. And Varun, more brokerage reports on banking, this time around specifically on SBI. What's the latest?
Right, Mubina. So Citi with a double note today on HDFC AMC and then SBI. They maintain their buy. Only thing is the target price has been revised from previously 375 to 400 rupees. Now, there's a couple reasons for this. The first thing is that they believe that the adjusted price to book is still really low on SBI. So this core banking business deserves a higher multiple according to them. It currently trades at around 1 time, and there's a gap now with the forward earnings. So on the back of that, there's an upgrade coming in as well. Also, if you look at how a key subsidiary called SBI Life has performed on the bourses, it's just been on an absolute tear. So while SBI still does have some kind of holding in that, these gains in SBI Life need to be factored into this counter, which also haven't happened according to Citi. So hence the upgrade another 25 rupees or 2 to 3% from their previous target. 400 bucks is where we stand right now, and SBI gaining smartly today, up 2%.
Yeah, 337 for an SB. I do remember yesterday we did see PSBs knocked out of shape. Today, all of them are, posting a bit of a recovery. Okay, meantime, another stock we're watching out for is Gujarat Borosil. The latest news over here is with respect to the restructuring activity that the company is undergoing. Now, many analysts believe that, the split ratio, by the way, is that every 2 shares of Gujarat Borosil held, investors will get 1 share of Borosil Glass. And hence, that essentially brings about an arbitrage opportunity of 14% in this merger of Gujarat Borosil. So, this one will be in focus. And additionally, of course, one must also note the fact that this is one of those small cap names, quiet movers, management pedigree as well, no complaints over there. 3% higher for a Borosil Glass, 163 rupees. Okay, let's take a look at the RWI small case and see what that one's up to at the current juncture as the markets recover. The same is the case with the RWI small case, but this one's a bit more quiet. The quantum of gains are not as much as seen on the benchmarks. Quick break on the show. Do come right back for more stocks and news. welcome back. You're watching Market Fafatat on ET now. Let's continue with our countdown of stocks. UPL, we had some interesting news as well last week. Varun himself had highlighted about how we are seeing a spike in prices of some of the products that UPL is associated with. Sumit, today as well at 580 rupees. What's your view on this one?
Well, it's looking good on charts. UPL has given some correction, and after the correction, it has started its upward move. Now from here on, there is a possibility that we might see a move till 595 or 600 levels. So those who have taken long positions in UPL, they can hold on the existing long positions and can go ahead and initiate fresh long positions at the current market price. Or on dips in prices till 575 should be used as buying opportunity with a stop loss to be placed at 565 and lower side for the upside target of 595 and 600 levels.
Okay, that's a trading recommendation on a United Phosphorus by Sumit. Samia, PSBs, like we said, yesterday we did see them on the losing end of the market and it really did bring the market as well down. But today there's a bout of recovery kicking in for a lot of these PSBs. What's the latest trigger? Any news flow here?
Well, yes, Mubina, what the report suggests is that Finance Minister Nirmala Sitharaman would be holding a review meeting with all the PSB heads in order to review what their businesses are done and how the entire situation is as far as the economy is concerned and how their update is as far as the lending is concerned. And ahead of this meet, we're just seeing some amount of uptick coming in all the PSB stocks. In fact, this is very crucial given the fact that we'll have an upcoming budget on February 1 and this meeting is crucial in order to see where does the demand scenario and the credit scenario is as far as the entire economy is concerned. So definitely a good, we may see some amount of announcements as far as the entire banking sector is concerned, given the fact that this is a very crucial sector for the overall health of the economy.
It is 2.2% higher. Not sure what's on the agenda, of course, of tomorrow's meeting. Mostly it'll just be a review of all the financial performance, perhaps of the quarter gone by. Okay, PSBs, like I said, are gaining today. And Varun, what's the news flow in Kerala?
So what's happening in Zydus and Kerala specifically is that they're looking to dispose of 2 units that typically will happen at around 1200 crore rupees. Now, if you look at it, the norm in the pharma industry, these sales tend to happen at 2 to 3 times price to sales. So you're looking at sales from these units to the tune of around 400 crores and margins of around 21% from these units. So the EBITDA that you're actually losing out on for Kerala based on this transaction stands at somewhere around 80 to 85 crores. But if you look at the fact that they'll deleverage around 1200 crores, if you take a cost of interest of around 9-10%, which is what most good companies pay right now, the interest they would save is roughly 100 crores or more. So if you look at it net, it's pretty neutral but still slightly positive, as I think you'll save more interest than you will lose EBITDA. But that being said, it's also a deleveraging trigger for this company, which has borrowed heavily to finance the Heinz transaction, which was earlier this year. So, the stock lacks a lot of other triggers, which is why it really isn't reacting that positively to this news. But if you look at it on a very fundamental level, any company which pays down debt, that debt straight usually gets added to market cap. So whenever this concludes and 1200 crores is paid off, you should see that coming into the EV via equity. So that's broadly what to look out for as far as Kerala is concerned.
Well, for now, the stock price is absolutely flat. But yeah, nevertheless, important news, and we will be keeping our eye out on this stock for some time now. Okay, let's move on and talk about another stock in focus, and that's BEL. A lot of these PSBs have been seeing some action. 100 rupees right now for BEL, 1.7% higher, so about a recovery kicking in yet again for this one after a dip below that triple-digit level. Sumit, any observations you have on this stock based on how it's moved recently?
We are seeing a pullback or bounce back in the counter from lower levels. BEL has given a move from lower levels, and the resistance for the stock is placed at around 100.50, 101 levels. Once the resistance levels are taken away, we can see upside move till 103, 104 levels. That would be the bounce back or pullback move till 104. A closing above 104 can take stock prices to 108 also. I think at present it's better to look as a pullback or bounce back candidate. One can initiate long positions with a strict stop loss to be placed at around 98 levels on lower side for the upside target of 104 levels.
Okay, that's BEL for you as we speak. It's 1.7% higher, staying above the 100 rupee mark. Soumya, what's the news when it comes to M&M?
Well, according to ET, its Korean unit is actually on a lookout for a strategic investor. In fact, the company Mahindra & Mahindra has actually started preliminary talks with a lot of other global auto majors in order to find a strategic investor for this unit. What we learn is that the move comes between the calls for Mahindra for injection of funds into the Korean company with mounting losses. So definitely they're looking for a strategic investor in order to, improve the bottom line of this Korean unit. As of now, these are all reports. Let's see what the company and the management says about this.
Okay, that's M&M for you, 0.3% lower. Do remember, a lot of these auto stocks were gaining very smartly for the last two trading sessions. Today, however, most of them are cooling off a tad bit. M&M as well is in that list. Okay, Varun, meantime, we've been talking about banking. Allahabad Bank, what's the news here?
Right, Mubina. So, Soumya's already kind of spoken about it with her PSB stock. So, Allahabad is obviously a PSU bank and they receive some funding. Around 2,150 crores has been infused from the government. This is done via preferential route. So, we had heard earlier in the year, obviously, that all the PSU banks were to be recapitalized, and Allahabad seems to have received its first tranche of money from the government. It's up like a superlative amount today on this news.
19 rupees higher for Allahabad Bank, it's 7% higher. And Sumit, Hexaware, anything that you observed for this one, anything that you'd like to recommend as a trading opportunity?
I think it's a weak stock. IT stocks are looking somewhat bearish, and Hexaware looks like that it has given a correction in past couple of weeks and the same trend can continue. 326 is the current market price. The support for the stock is placed at around 320. Once the levels are taken away, we can see fall to 310 or 305 levels in next couple of days. I think it's better to be on sell side in Hexaware, better to avoid long positions. Upside, the resistance for the stock is placed at around 340 levels. Till the time the levels are not taken away, it's better to be on sell side for the targets of 310 and 305 levels.
All right. Well, on that note, we're out of time, so we'll wrap it up on this edition of Market Fatafat. Sumit, Soumya and Varun, thank you so much for joining in. But meantime, if you look back at 2019 and see what exactly the trend has been, it looks like passive funds have been gaining a lot of interest and momentum. In fact, 50% of the active funds actually underperformed their benchmarks, which makes one question, why are we paying the management fees and the higher expense ratio for active funds versus passive funds? Well, here's Mr. P.V. Subramaniam's advice on how one should ideally allocate their funds and how, if it's just a one-year trend, it's not necessary that it would continue this sort of underperformance by active funds. Listen in.
Oh, I don't think India is a great indexing market, but yes, it makes sense to index because there has been no, entry load is already not there. So if you see historically over a very long period of time, it is index funds which have beaten the other funds, because earlier you used to have entry load, then you had exit load. If you remove all the loads, I think index funds have done well, but I don't think we are a market of just indexing. So largely people should put money in a multi-cap fund, which puts say 60-70% in a large cap fund, 20% in a medium cap, and 10% in a small cap. A fund like that, if you want just one fund to fill it, fit it, forget it kind of a thing, yes, that makes sense. Otherwise, index fund can be a part of your portfolio. Yes, it can. Maybe 20% of the funds that you put will be in an index fund. I don't see Indians putting more than that in an index fund. Maybe institutional investors, but not retail investors. Between what the fund investor should do and what he does, there is a huge gap. Largely, what should a person do? He should look at his goals, and all those goals which are achievable at between 8 to 12%, perhaps that is what he will achieve with all his investing genius. If he's got goals which he needs 18% return and 17% return, he has to downsize his goals. It's not going to achieve. The market is not going to give him 18% just because he needs it, right? So he has to look at it, whether he is able to, with his investment in an index fund or in a passive fund or even in a debt fund or in an equity fund, whether he is able to achieve his goals. Once you are able to achieve your goals, it doesn't really matter. Don't worry about alpha on a monthly basis and yearly basis. You don't understand how it is happening. And you will just exit saying, oh, he's not performing well. And after you exit, he'll suddenly give a 60% return or things like that. And then you'll say, oh, why did I exit? So you can't time the market, except that you can't time the market, and be in good funds.